Hello, I'm Liz Lumley of Finextra, and we're here at Sibos in Boston. And today we're speaking to one of Finextra's favorite people, Ruth Wandhöfer of Citi. So hello, Ruth. You're always very knowledgeable about a lot of topics, and one of the big topics here at Sibos is, of course, intraday liquidity. Now, will some of these intraday liquidity projects really force banks to emerge from their internal silos?
Yes, now we are in this phase where Basel III is becoming a reality with liquidity buffers and regimes being defined and implemented. But the next thing that we have to look at as an industry and individual banks is, of course, the reporting monitoring pillar, which means you have to report your intraday data to regulators on your own liquidity that goes in and out of the bank and what you're doing for your correspondent clients. This framework is nowhere near implemented. The deadline was initially set for next year, and we're seeing that regulators are quite slowly emerging with their requirements. There's a risk you have a disconnect, and of course the industry faces the question, where do I get the data from? Is it the right data? How do I exchange that data? And when you mention bank silos, it actually requires a bank to operate across a number of entities inside. So it's to do with treasury, balance sheet management, the payments department, the securities custody side. It's all about all the flows, and it impacts multiple client bases as well. So it forces a bank to actually have an internal joint project on understanding what is happening, what's supposed to happen. And then we have the industry side, where there's a lot of unanswered questions, where we would help regulators to define more detail in a way that industry can actually fulfill the reporting.
So of course, another big topic at Sibos is the march of real-time payments. How will some of these intraday liquidity projects impact the march of real-time payments?
That's a really interesting question, because real-time payments, a lot of it is because of customer demand, because of the system capabilities. We've seen it emerging in a number of countries and regions. But when you look at the intraday, this is not only about reporting, it's almost the first step. It's about improving your intraday liquidity management. And depending on how regulators will react to some of the data, what they may require as a follow-up to this, intraday liquidity has to become a really strategic issue, especially for those banks providing correspondent banking services. Now, when you have on the one hand the customers asking for faster payments, and fast also means risk. And on the other hand, you have regulators looking at your liquidity positions and trying to make sure that you don't have extreme peaks intraday, but a smooth client profile. You come into the question, by getting there, we may actually end up with certain scenarios where payments are delayed because risk is being perceived. So this is almost the opposite of what a lot of this faster payment, real-time payment discussion is all about. And I think we really have to get to a point where we have all the right data, and we have also the right reaction of regulators to understand what is the best response in terms of your intraday peaks. We discussed today at the Standards Forum that, for example, for certain clients you would need almost a pre-advised information to make sure you don't have these extreme hiccups throughout the day, because you could end up having regulators saying we don't like your liquidity profile, and there may be some buffers associated. So it's very interesting to see these two debates, which for many people are disconnected. One is about a service to consumer base, to a corporate base, and the other one is about risk management and Basel compliance. Combine the two and you will have a very interesting outcome over the next few years.